Hello, and welcome to the Moss Adams presentation of Federal Contractor Solutions, Audit and Closeout of T&M and Labor Hour Contracts. Before we get started, we will just be presenting some housekeeping items.
Moss Adams is pleased to present another in our ongoing series of continuing professional education webcasts. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize both how you view our presentation and how you interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. For example, you can click the file folder icon to download the group attendance sheet and a PDF copy of today's slides. You can ask our presenter questions during the webcast by clicking Q&A in the bottom left-hand portion of the icon bar and typing in your question. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. We'll ask polling questions throughout today's presentation. Per the National Association of State Boards of Accountancy Webcast CPE standards, CPE credit will be awarded based on your participation in these polls. To respond to a poll, click the button next to your answer. If you're attending this webcast in a group, in order to receive CPE credit, you must complete our attendance sheet, available in the file folder icon at the bottom of your screen. Please have all group members sign the sheet, and please remit only one sheet per group. Also note, today's session will offer you one CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. CPE credit can be awarded only to participants registered as themselves and is not available to participants who view the on-demand version. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon to open a PDF file you can save to your computer. We'll email a copy of your PDF certificate in 2 weeks if you can't download it today. As a reminder, the presentation you're about to see is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
Presenting today is Curtis Matthews. Curtis leads the Moss Adams Federal Contracting Risk Management practice. He has more than 30 years of experience in federal and state program controls and audits, including serving as a Defense Contract Audit Agency auditor. Curtis formerly directed business process and technology improvement projects for Intel Corporation. Curtis has helped companies implement federal contracting compliance programs and successfully respond to and address DCAA audits. Joining Curtis is Jeff Witt. Jeff is a senior manager in our federal contracting risk management practice. He brings over 20 years of relevant experience as an auditor of government contracts. Jeff's experience includes 10 years in the role of government auditor at the Defense Contract Audit Agency. Jeff served as lead DCAA auditor on a variety of engagements, including incurred cost, forward pricing, defective pricing, equitable adjustment, and delay claim audits. Please welcome Curtis Matthews and Jeff Witt.
And then the real welcome goes to all of our attendees. Thank you for participating in our webinar today. Time and materials, government's contracts are extremely prevalent. They've got a lot of requirements that more broad, cost reimbursable contracts have that are just, CPF, cost plus fixed fee, or cost plus incentive fee contracts have. But they're, I don't think these particular contracts get as much emphasis sometimes in the training that's out there. So we thought it'd be good for you to get some great information on how to address your rate requirements, address your compliance requirements regarding these types of contracts. And also, we thought it'd be good for you to get some information on some changes that are going on with the government that will likely have implications on your organizations. basically, our objectives today are to provide you a solid grounding in time and material compliance requirements, and we just refer to these as T&M contracts. It's just a little shorter, a little easier. It will also provide you good information on, at least good from our perspective, and hopefully from yours, on common audit issues that have surfaced in these particular contracts. You know, we work in this area extensively, Jeff and I, and we see a lot of issues come up across a wide variety of clients, and coming together today for our webinar provides an opportunity for us all to focus a little bit on some of what we're seeing here in this arena. Our agenda is right there in front of you on the slides. It says indicated. We're going to cover each of these areas, you know, and these relate directly to the objectives of our webinar today. So we have a polling question here, and perhaps Tanya, you could read this.
I will. So, does your organization have government-funded subcontracts that are time and material or labor hour contracts? Yes, no, or I don't know. And we'll give everyone just maybe 20 seconds to go ahead and answer the poll. Once you have made your selection, please be sure and press the Submit button in order for your answer to be recorded. And we'll go ahead and close the polls and take a look at our results.
Well, you're in the right place then. 63% of you have T&M contracts. And for the other 24% that don't, well, you may in the future, and hopefully it'll help you. And for those that I don't know, well, it'd be a good thing to find out. So let's move on to your responsibilities as a prime contractor with a T&M contract. Basically, you have various requirements under FAR 42.202. You have to conduct incurred cost audits. You also are required to perform pre-award audits is what I like to call them, or proposal audits, and systems adequacy reviews are also a requirement on you. And of course, these are requirements that you have to face as a prime contractor as well in dealing with your government customer. So essentially what we're dealing with here are flow-down requirements. The first two types of audits that you would have to conduct, you're required to conduct, don't get as much press, don't come up as often. I'm not even sure how often they're truly enforced by the federal government, but I do know for sure that on the third category there is definite enforcement, and there are definite implications if you don't do what you need to do in regards to incurred cost audits. The current environment is basically essentially, and a lot of you are experiencing this and know this, is that the DCAA is essentially either prohibited from auditing helping you audit your subcontractors. So for example, if you are a prime contractor for a non-DOD contract, so for example, Department of Energy or Homeland Security or NASA or others that are non-DOD, the recent Defense Authorization Act that the President signed into law last, I'll say fall.
November, yeah.
So, or maybe winter, but it's toward the end of last year, indicated that, it indicated that the DCAA is no longer going to be available to perform these audits. They're not, basically they're prohibited from auditing for non-DOD agencies now. And what we're seeing, having a number of people from the DCAA work on our staff and having them have a lot of connections back into the agency, is that there's a fair amount of redeployment. Pencils are going down on these types of contracts. There's a pretty big shift going on with the DCAA, and this is one of those big events that you will see ripple effects from, and we're already experiencing some ourselves, and that we're getting phone calls actually from agencies saying, how, we need help. We have, with these Inspector General organizations issuing reports on us, actually the Inspector General issuing reports on us, indicating that we have issues in regards to our compliance with the requirements that I just went over with you. These apply to prime contractors, particularly when it comes to the agencies, and subcontractors when it comes to you. And so they're essentially trying to deal with the respective IG organizations embedded within them who are issuing reports to them saying they're non-compliant and they don't have resources to address it, so there's a big issue going on here. In addition to that, if you're mainly and primarily or only have DoD contracts, you also have a problem too, because basically the DCAA manpower is light, which is really not new information, I don't think. And they're very far behind in terms of conducting the audits that need to be accomplished. So no resources, or little I should say little in terms of resources. There are resources, but they're focused in certain areas that may not be to your benefit. But yet you as a prime contractor are definitely held accountable and responsible for verifying that your subcontractors are charging you in a compliant way. That's something you can't get out of. So it creates a situation where there can be significant ramifications to your organization, to you personally, possibly, and you have to find a way to conduct these audits. And if you have a really strong staff that's available and ready and just right there with the skill sets that you need to have within your organization to address the issues that you have to face here in terms of compliance with the subcontract audit requirements, in addition to some of the other areas that the government expects you to comply with. If you've got that strong internal staff just ready to deploy to go out and do these audits, then you're in a good position. And if you don't, then you're going to need to find a way to contract that out with professionals who are competent, who can conduct these audits in a way that are going to produce a result that your customer is going to accept. And I think it'd be actually kind of good for us, and we have a slide on this to dig into this just a little bit deeper. So basically, this is an example of a report issued by Department of Energy, OIG group. Basically, they indicated that not only were the audits not done, but also the audits didn't meet professional standards that they expected. So essentially they're saying the DCAA didn't measure up in the audits that they were doing, and they're saying that the contractors that were conducting their audits, their work didn't measure up either in the audits that they were conducting. So, as many of you know, when working with the federal government, you're dealing with a sovereign, and that sovereign makes the rules, basically. And that sovereign essentially expects you to understand all the rules that you're required to comply with. They're public law, whether those rules are just spelled out in infinite detail in your contract or whether they're not in your contract. And here we have a FAR rule that says you have to do these subcontract audits and you need to comply. So what we're seeing out there is basically, I'll give you an example from a client that we have, is we have a client that, or two, actually there's multiple, I'm thinking about it, there's been multiple situations now where our clients have not been on top of this, they haven't conducted these audits on a timely basis, and their customers coming back and asking for the audit reports. And the audit reports aren't available because basically they haven't done the audits, and now the subcontractors are saying, no, we're past the time in which you can conduct this audit. You can't come in here and audit our books and records. So resulting from that becomes a negotiation that their clients are not really wanting to have, where they have to go in, and this isn't like, honestly, it's not singled out to just like one organization. There's multiple organizations that have been on top of this. But the various agencies, because the OIGs are looking at what they're doing, because they have these requirements, are really, and their contracting officers are scrutinizing the subcontract charges that are coming through and are negotiating a much lower amount to pay the prime contractor than they would have been paid otherwise. And that's where the rubber hits the road. So for just give you an example, say you have a $3 million subcontract, the agency says, okay, you didn't do your audit on this cost reimbursable subcontract. We have to now come up with some form of settlement on this because basically we believe the agency is saying, the contracting officer is saying, we believe there's an allowable cost in the subcontract. So imagine you're in that position yourself and you're facing your contracting officer saying, you didn't comply, I believe there's an allowable cost there, and now you have to come up with some resolution or settlement, which essentially will be subject to scrutiny by the OIG and subject to public law and FOIA requests and everything else that goes along with, or Freedom of Information Act requests and everything that else goes along with doing work in this public arena. Well, it's not a good scenario to be in, and yet organizations that are not on top of the subcontract audits are facing that. In addition to that, the OIG, and this is one example report of many. We pulled many of these reports. I mean, they're across multiple agencies that have conducted audits that have the OIG has conducted audits on, and essentially they all read very similarly. So we spared you and are only providing one for you to look at here. But basically, the other issue you run into is you may have the audits and you can produce them, but then we also have seen this in our clients. In some cases they were done internally mainly. I'm not sure of any external ones. There might have been. I don't know. Are you aware of any external ones? This is Jeff Witt here.
Not really, no.
Okay. So mainly internal ones, or what we are experienced with, that were rejected by the agency. So essentially the agency said, look, your internal audit report on the subcontractor does not comply, does not satisfy our requirements, go out and now find a way to get this audit done and find a way to comply. So this becomes a big issue for the client, and it's something that, again, you want to avoid for sure. So what are some of the non-compliance impacts? Well, I covered one, and to me that's the biggest one, which is basically you don't get paid all that you're due, yet you paid the subcontractor by the time this all kind of rolls around, generally. Not always, there's no absolutes, but generally. The other implications are reputation, and also it makes it difficult to close out your contracts. So with that, we'd like you to answer another polling question here. And Tanya, maybe you could take us through that.
Thank you. The DOE OIG report of February 2015, titled Special Report on Incurred Cost Audit Coverage, indicated that most weaknesses identified in incurred cost audits were due to, was it incorrect standards applied? Was it lack of independence or objectivity or due professional care possibly, or incorrect sampling techniques? Or maybe you just didn't catch that. So please select your answer and press the submit button in order for your answer to be entered. And we'll go ahead and take a look at our results by closing the polls.
So Jeff, we'll let you run with the the answer here?
Yeah, so 52% said lack of independence, subjectivity, or due professional care, and that is the correct answer. I guess I will start talking about a little bit more about the National Defense Authorization Act. So, as Curtis mentioned, it does prohibit DCAA from performing audits of non-DoD contracts until their backlog is reduced. So at some point in the future, theoretically, if they were able to reduce their backlog to 18 months, then they could again start doing audits of non-DoD contracts. But they've already indicated that certainly isn't going to happen for 2016, and could be many years, if not forever, before they would be in a position to do that again. So the audit sampling approach currently employed by DCAA results in most smaller contracts not being audited by DCAA. So in addition to the issue of the NDAA change and not having contracts audited because of that, there's also this change that happened in 2013 whereby DCAA adapted an audit sampling approach where they would classify contracts as being low risk and thereby not auditing the majority of those. So that has further presented issues to contractors when the majority of their subcontracts are falling in these buckets and not being audited by DCAA, and the contractor trying to figure out how it's going to close out his contracts in those circumstances. So this situation affects any type of audit. As Curtis mentioned, we're somewhat focusing on incurred cost audits, but the NDAA also prohibits DCAA from doing proposal audits or systems audits or anything that's an audit. And so really I think agencies and contractors are going to have to start thinking about proposal audits as well, because DCAA is not going to be doing those either. So DCAA did issue an MRD, or Memorandum for Regional Director, in January of 2016, and it describes the impacts of what DCAA can no longer do, and it pretty clearly just states there that anything that remotely resembles an audit is no longer going to be done by DCAA if it relates to a non-DoD contract. Now we want to get into what the unique aspects of T&M and labor hour contracts, and what the implications are for doing an audit of those. I think for cost type audits, those large cost type contracts, everybody knows that that's a robust audit that involves auditing the indirect rates, it involves auditing all the direct costs, and it's a substantial project to do an incurred cost audit of a cost type contract. A T&M audit is less in scope than that for some reasons, but there are still some risks that must be addressed, and so it's finding that right level of audit based on the type of risk presented in a T&M contract is what I think we would focus on. And so what are some of the unique aspects of it? It's a payment at a fixed hourly rate, so this T&M rate has been negotiated that it gets applied to the labor hours. It doesn't change based on actuals, it's just a fixed rate, and it has to meet the labor category qualifications specified in the contract. So what's important on a T&M contract is that the hours are being recorded in the right category so that somebody meets the qualifications for that T&M labor category that they're being billed at. And so it's more of a focus on auditing the category there and on the hours there than on the amount of the rate that's there, because that's a fixed rate at that point. The rate may include indirect costs, G&A, and profit. So those things are all embedded within that negotiated rate. And labor can be performed by the prime or subcontractor and still be shown as part of that T&M rate in some circumstances. And they must substantiate the hours billed by evidence of payment to employees and maintaining timekeeping records. So the evidence of payment is something that DCAA focuses on, and depending upon the nature of the engagement, as we'll talk about, there's various standards that can be employed here, will dictate how much time will be spent on auditing evidence of payment in this circumstance. But timekeeping records is always key to auditing a T&M contract. And I think it's important, there's an important risk assessment process that needs to happen with regards to those labor hours. That is the focus of the audit in general. The other direct costs or the materials elements of costs are generally not the biggest portion of the contract. Usually the hours times the fixed rate is the biggest dollar value on the contract. And so an auditor should be doing an analysis up front to look at the situation for that contractor. Do they have other government contracts? What types of contracts do they have? Do they have other cost type, T&M, fixed price contracts? Do they have commercial contracts? Is there a risk of them mischarging hours between one contract type and another? These are all important risk assessment issues that will then drive the audit scope. And I think within that context, it is important to focus on any transfers of labor hours. If the auditor should focus on if there are a different mix of contracts involved, on whether there have been labor hour transfers from one type of contract to another. That would be an indicator of risk that should be addressed in the audit. What's important also is to maintain records of documentation regarding the qualifications of the employees, and that can be a difficult task. Sometimes we become involved when we're auditing from 5 years ago, and does that subcontractor still have documentation for the labor categories and the qualification of the employees within those categories? Maybe or maybe or not, but it does tend to be an issue. Material includes direct materials, subcontracts for material, and other direct costs. So even though we're using that term material as part of T&M, it really involves all those other direct costs. So payment for material is also subject to FAR 52-216-7, which we will discuss in more detail coming up. So some more unique aspects for discussion here is that other direct costs and indirect costs cannot include any cost in the fixed hourly rate. So that's a little bit of a confusing statement, but what we're really saying is the auditor needs to be auditing for duplication. They have to be understanding the risk that there was a buildup to create that fixed rate, and that fixed rate included labor costs, but it also included any overhead or G&A and profit. And to the extent that the contractor, the subcontractor, is also claiming direct cost in the material component, there needs to be analysis to say whether any of those costs that are being claimed as direct were already really intended to be recouped through that fixed T&M rate. And this is where the subcontractor needs to have some policies around direct versus indirect charging to be able to explain to the auditor how it determines when it's going to charge something direct versus indirect. And so indirect costs may be applied to materials. That isn't widely known, and it doesn't widely happen that way. Usually there's no markup on the materials component, but we have seen times where, depending upon the contract and the contractor's system of applying indirect costs, that there could be an application of indirect costs to materials. Profit is not allowed on the materials portion of a T&M contract. And with regards, we've been using the term T&M to include labor hour contracts. That's very similar to T&M, but without the material or ODC costs generally. T&M subcontract flow-down requirements is our next subject. So there are no thresholds that limit what must flow down to subcontractors if included in higher tier contracts. So auditors should be focused and aware of the flow downs, and depending upon the scope that the auditor is performing, they may or may not be responsible for addressing some of those flow downs. We're going to talk about the standard to be applied and how that will impact what the scope could be. So in particular, what opinion is being expressed by the auditor? Does it include compliance with the flow downs or not? Sometimes the opinion may be just about FAR compliance and or some subset of the total contract and not the total contract. So it's really important between the client and the auditor to have a good understanding about what is in scope and what is not in scope for the engagement, and that's impacted by the type of engagement. Any purchase orders or subcontracts issued may be subject to certain flow downs, regardless of the contract type or whether it's a commercially available item. And I don't think that that is well understood. I've seen situations where it's assumed that because it's a fixed price contract or a commercially available item contract that flow downs don't apply. But there are some that do apply regardless of contract. But then there are some flow downs that do depend on the nature of the subcontract agreement. So, for example, the allowable cost and payment flow down that we'll be talking about in a second. The incurred cost audit impact is that auditors should be aware of the flow down clauses that impact the allowability and allocability of costs or the chargeability of labor hours. So we've been talking about this clause. Payments under time and material and labor hour contracts is one of those that would be a focus for generally for this type of audit, because it requires that it's paid only for labor that meets the labor qualifications. We've talked about that, and it shall substantiate payment vouchers with evidence of actual payment. So that's one of those areas of DCAA focus. They spend a lot of time proving that expenses that are being claimed represent actual payments by the contractor. Now, whether your audit of a subcontract should focus on that will depend upon some factors. Individual daily job timekeeping records is important, and records that verify the employee meets the qualifications, as we discussed. Material is subject to the allowable cost and payment clause, and there are some requirements related to that, including that the contractor must take all cash and trade discounts and must credit the government whether taken or not. We're now ready for our next question.
Thank you, Jeff. With regard to the application of indirect costs to time and materials contracts, which of the following is true? Indirect costs can never be applied to the material portion of T&M contracts. Application of indirect costs to the material portion of T&M contracts depends upon the contract terms and the contractor's established allocation practices. A fixed indirect rate is applied to the materials portion of T&M contracts, or none of the above. And we'll go ahead and close the polls and take a look at our results.
Great. Well, the majority of you said that it's the second item, which is material can receive an application of indirect rate in some circumstances. And I'll say we don't usually see that. We usually see the material cost not being burdened. But if the contractor has an established practice of applying indirect costs to those types of direct costs, and if the contract has allowed that, then there are times when you will see an indirect rate being applied to the materials portion of those contracts.
Yeah, I could add too that having been a contractor myself, and also being a DCAA auditor myself, and being a consultant now with Moss Adams, and I guess we're still auditors here, so basic compliance auditors, we're essentially on the material side of it, you have to be really super careful about what you include in that rate and what you don't. And where we see a lot of issues is where organizations don't really understand federal cost accounting standards. They don't understand the what types of costs you can include in a material rate versus costs you can include in a labor rate. So in a labor rate, there's many more overhead and G&A costs and indirect charges that can be applied that are within most organizations that we work with over the years. And essentially, for a material rate, there's a lot less, indirect cost that has a causal beneficial relationship between the material cost and the indirect cost that's being charged. So you'll typically see material rates being a lot lower, just kind of as a general rule, than the labor rates So you have to be really, I guess what I'm getting at is you have to be careful about how you segregate your indirect cost pools that you're going to apply to labor versus material, and I'm sure you all are aware of that. But I pay particular attention to the types of costs that are going to be driven by materials, and look at what indirect costs are caused by materials. And I think you'll find that there aren't that many, but there can be some, and you can have an indirect material rate that can be applied. So Jeff, go ahead.
Thank you. So one of the things we wanted to add to this presentation, which we haven't included in some of our past presentations, is a little bit of a focus on the audit standards to be applied. We do see a lot of RFPs being issued for these types of audits, and some of these are being issued under AICPA attestation standards, some of them are being issued under Red Book standards, some of them may be consulting, and some of them are Genghis. And once that decision is made at the RFP stage, and you get a number of people bidding on that, then you're kind of locked into that approach, whether that might be the best approach for that audit or not. So we think it's a good discussion to have, to talk about the various standards that can be applied to do one of these audits, and that it does make a big difference which standard is being applied and what the implications of that would be.
Jeff, can I ask you a question?
Yes.
Audience, sorry about the kind of give and take here, but I did want to ask a question. And it had to do with, my recollection, it seems like in some cases they'll issue the RFP with a particular standard and then rethink it later and then come back with a different standard that they might want to apply. I mean, it seems like that's occurred too.
That's occurred, and it's kind of problematic, especially if you have multiple people bidding under one scenario and then the scenario changes. So it's something I think you want to avoid. Better to figure it out at the beginning, right?
And no doubt about that.
So the options that are available, the primary options that we're aware of, is that there are the AICPA consulting standards, and even though you've got the word consulting there, there's a lot of audits that are done under these consulting standards. There's also Red Book internal audit standards, which, as the name implies, is a little bit more geared towards internal audits. Then there's the AICPA attestation standards, and also then the Cadillac of all audits, the Yellow Book Generally Accepted Government Auditing Standards audit. And so we'll talk about the various options, and hopefully everybody thinks Cadillac is the most expensive, because this probably is too.
Most expensive, but it seems, of the four choices, it seems to be the one that allows for really tight professional standards in an arena like what we're working in.
It is.
And I think, government auditing standards, of course, come above. Genghis rolls up into government auditing standards, and the Yellow Book is, pretty core to it. As we kind of look at the Red Book, that's basically the Institute of Internal Auditors, which is intended more for internal audit. AICPA attestation standards could be applied. There's a particular section that provides for compliance, but it also doesn't necessarily provide a lot of insight sometimes in terms of effectiveness and efficiency that the Yellow Book would provide.
Right.
And then AICPA consulting standards are kind of wide open. At least that's kind of my take on it. I think that's...
Yeah, and we're going to get into each of these, but I think that it's a really important decision for anybody deciding how to procure these audits, because it impacts many things. It impacts the flexibility to address prime contractor areas of focus, for example. Under consulting standards, there'd be much more flexibility in what can be done to meet the risks that the prime sees versus those things that need to be done just to express an opinion, which any CPA firm will be focused on, if it is an attestation engagement or a Genghis engagement, on that expression of an opinion and doing everything they have to be able to express that opinion in a safe way. It impacts materiality, it impacts the testing that's needed, It impacts the reporting options. It impacts the internal controls assessment and reporting that needs to be done. So it's pretty critical. So again, after that RFP is issued, not so much flexibility in being able to think about what is the best approach. So getting into the details then, we're starting with the consulting, AICPA consulting standards. And so these standards differ fundamentally from the CPA's function of attesting to the assertions of other parties. So there's no attestation or expression of an opinion, but there can be an audit report with exceptions where you've got the contractor's claim and you can show the reported exceptions from those claimed amounts. In an attest service, the practitioner expresses a conclusion about the reliability of a specific written assertion. So that is what the firm would be focusing on, the auditor would be focusing on that assertion rather than some other areas that could be of interest also to the contractor, the prime contractor. In a consulting service, the practitioner develops the findings, conclusions, and recommendations presented. The nature and scope of the work is determined solely by the agreement between the practitioner and the client. So it's important to have that good agreement up front that is real clear on what is to be included in that audit and what is not. It provides flexibility, but as we said, it still can result in the issuance of an audit report that looks very much like a DCAA report would look. Now, DCAA indicates that their reports are done under Genghis, and they've gone to that approach because of criticism that they faced in the past for not doing Genghis reports. But their idea of a Genghis report is a little bit different than what a CPA firm's idea of a Genghis report would be. And so...
And yet, it's even different than what we see in other agencies, too.
Yes.
It seems to me.
Yep. So, moving on to Red Book. We've done some projects involving the Red Book standards, and it's an option. It does open the door to questions about independence, because anytime you're stating that you're doing a standard as you're conducting an audit under internal audit standards, essentially, there's more questions about, well, were you independent? Were you reporting to the internal audit department and doing what they said? How does that make you independent? And so there are some questions that need to be considered there. There is good flexibility in what can be done to meet the client's needs, but there are also some drawbacks, as we mentioned. Moving on to attestation standards. So within these attestation standards, there's a couple of things. This is a codification of statements on standards for attestation engagements is the controlling document. It also relates to the standards for attestation engagements, or SSAEs, and it includes some very specific requirements in the area of general standards regarding training, independence, due professional care, and field work, planning, evidence, and representation letter, and then also in standards of reporting. There's only a specific report formats that are allowed, and it's not going to look like a DCAA report would look in that regard. Auditor has to follow these standards to express an opinion and cannot follow direction from the client that would deviate from these requirements. So this is where the CPA firm is cognizant of their risks, and if they're expressing an opinion, they're going to do it in a way that they make sure they can express that opinion regardless of where the client might want them to focus, unfortunately. So the opinion can only be related to a specific stated criteria. So if the criteria is compliance with FAR, then that opinion would only be about compliance with FAR. And that's what the auditors would be focusing on solely, is being able to express that opinion. There could be additional requirements, such as specific contract terms, but that would have to be well written in an attestation engagement to make it clear what is part of that scope. If you get too broad, then the auditors are going to be concerned with being able to express an opinion in that context. So then we move on to Genghis, and I think we've seen some instances where there's a preference towards Genghis, and I don't know that it's always the case that those with that preference really understand what the implications are of going to that approach. So Genghis is very specific. There are 7 chapters that we've listed here from the Yellow Book that specify what can be done and should be done under Genghis. So to be Genghis, it has to be one of these. So for example, it could only be a Chapter 4, 5, or 6 engagement. It could be an audit, a financial audit under Chapter 4, and these audits could be done as an audit for sure. It could be done as a Genghis Chapter 5 engagement or an attestation, in which you could be doing an examination, a review, or an agreed upon procedure. Those are options. Or it could be done as a performance audit under Chapter 6. Those are your only options. You cannot do anything else and call the result of that a Genghis audit. So a little more detail then on Genghis. We think it's important to understand that most Genghis audits of incurred costs would normally be done either as an audit or an attest, and they're very similar. An attestation examination is very similar in many regards to an audit, and they would both require meeting requirements, the basic requirements for an AICPA attestation, plus additional requirements specific to Genghis. And the expression of an opinion on compliance with FAR and other stated requirements is key to that, defining what that opinion is going to be expressed upon. Specific forms of documentation to evidence compliance with Genghis requirements are required, and an included report on internal controls is an important thing to understand, that under Genghis, either audit or attestation, there is a required report on internal controls that has to be included with the main report. So the auditors have to do work to be able to prepare that report on internal controls and to identify any significant deficiencies or material weaknesses in internal controls that the subcontractor may have.
Okay.
Yeah.
So if on that particular topic, we see like a number of occasions actually, where we've been in this situation where we're asked to provide an opinion, and the opinion is that the subject matter we're auditing had no exceptions in terms of the numbers themselves, what was being charged. However, we've had to issue issues related to the internal controls. So they got to the numbers the way they should have, but the client basically didn't have the internal controls that would be expected to rise. Basically, auditors use terms like deficiency, significant deficiency, material weakness. These are common audit terms that the result when you're evaluating internal controls, and we've had to report control deficiencies, significant deficiencies, even though the numbers were good. So if you're going to engage, I really want everybody to understand this, if you're going to engage in an engagement that requires you to provide an attestation, and that includes an internal control evaluation and report, which it will, then you may end up with a result that you may not like in terms of the audit report, because the auditor has to comply with these rules. That's the core to everything we do, is we have to provide our services in accordance with professional standards so that you have a credible work product, and so the agency you're working with has a credible work product that they can work with. So, sorry, go ahead, Jeff. Sorry.
Yeah, thank you very much, Curtis. That was a great point. So I think we're down to about 11 minutes left here. I'm going to pick up the pace a little bit on my part. I'm not going to go into too much detail on these next couple slides, but basically what this is a comparison of the Genghis Yellow Book requirements to IIA standards. And if you have, we can certainly get you the slides if that would be helpful to you, to be able to see what those differences would be between those two particular standards. In some cases, the Genghis requirement does require more work. For example, under independence, there's the conceptual framework that's required under Genghis that has to be documented to show pretty thorough analysis to be able to conclude that you are independent in that circumstance. In some cases, the IIA standards is actually more robust. Not too many, but in some cases that is the case. And so we've got quality control, we've got fraud, we've got follow-up on prior audits. They all have some differences and nuances depending upon the different focus between a Genghis engagement. And then, of course, at the bottom there, we've got reporting. And so, as we mentioned, Genghis has specific requirements for report content. The IAA does not require those kind of specific report content. There's more flexibility there to kind of meet the client needs than there would be under a Genghis report, which has to follow certain pretty stringent requirements. With that, we are to our next polling question.
Yes, our fourth and final polling question. If an incurred cost engagement is to be performed under Genghis standards, the following are allowable options. Is it an audit in accordance with Yellow Book Chapter 4? Is it an attestation engagement in accordance with the Yellow Book Chapter 5? Perhaps it's a performance audit in accordance with Yellow Book Chapter 6, all of the above maybe, or none of the above. Again, please press the answer to the left of your selection and press the submit button so your answer will be recorded. As Jeff mentioned, we will be sending you out an email following the webcast where you will have the option of being able to download today's presentation at your discretion. So we will go ahead and close the polls and take a look at our results.
Hey, you did great. This wasn't a trick question, so all of the above is a correct answer. Essentially, in these webinars, we can only cover so much in an hour's period of time. And essentially, Jeff and I are available. We're not clock watchers. If you have questions about the material we're covering, or you want to just talk with us separately, you can reach out. Tanya will provide our information, and through this webinar approach that we're taking, we're totally reachable, and we can answer any questions you have directly. But essentially, we'd like to kind of wrap up what we're covering here today, and essentially just mention, just to kind of summarize that essentially some of the issues that we often see. These are common issues that you really need to look out for in these types of contracts that we've just talked about and under the audit standards that we just covered, is that we see a lot of times people are being billed out at the wrong category. We'll see like the same person with multiple labor categories being applied, especially when a lower level person is being billed out at a higher level category. That can be identified pretty readily during an audit, and do all you can to avoid having that happen. That's just a good thing to not be doing and to look out for. On the direct costs, definitely look at part 31. Ensure that you've got a working understanding of all the different types of costs that are allowable and that aren't, and have meticulous records to document that the costs you have are allowable. Even for simple things like, did we use the lowest available airfare? I mean, you have to, if you don't track that at the time you book the flight, or you do your work in terms of, related to incurring that cost, if you don't have records of that at the time, it's going to be a nightmare to go back and try to figure out if that was the lowest available fare at the time the flight was taken, and it becomes a challenge to support the costs. And costs can fall into two categories during an audit: unsupported costs, and then just flat out unallowable costs. And you just don't want to be in either category. So keep good documentation. The other thing we would say is that ensure that your timekeeping system is approved, it's tight, it's in good shape. We've had people produce literally Outlook calendars to try to support their time. Some groups just say we don't have anything. This is not the place to be. And you really need to be able to have a system that allows the employees to identify their time, to have good charge codes that are relevant to what they're working on, have them understand what it is they're charging when they're charging it, which is half the battle sometimes. And also ensure that the indirect time is captured properly as well. And then in terms of unallowable costs and indirect rates applied to material, that we have had some questions during the webinar about this, and we talked about this earlier. But be sure to to ensure that labor costs aren't included in your material rates. In terms of key takeaways from today, well, I think we delivered what we promised to deliver today, and just so be sure that as you do your work, that you don't end up in a situation where you're at risk of disallowed costs because you haven't been paying attention to subcontracts, or because you have been in a situation where the work that has been done, maybe by someone in your organization to audit the subcontractor, has not been sufficient to be acceptable to your contracting officer. Don't land there. That's a pitfall to avoid. And basically, keep in mind that the DCAA is not. We hear this all the time. The DCAA is going to come and do this audit for us, and then they don't, and then the organization's in trouble. So keep in mind, DCAA resources are relatively short in supply, and may not be available to you when needed. And essentially, when you're determining the audits to perform, and when you're doing the work you have to do, just make sure, again, it's of requisite quality. I think we went through that. In terms of other takeaways, again, the DCAA is not going to be auditing non-DoD contracts. And I can't overemphasize what a big change this is. This is a huge, huge change that has impacts on all of us. Your government customers, prime contractors, subcontractors, DCAA not being there to audit, and there's a lot of non-DoD contracts out there. Not being there is a big change. We want to sensitize you to that because it will have an implication on what you're doing now and in the future. And essentially, the DCAA sampling approach also reduces the level of coverage and support you're going to get there. The other item, we would just like to mention is that each agency will be developing a response to address the gaps we talked about, and we'll provide, essentially, just to kind of skip to the bottom line here, as the Moss Adams will provide updates as things evolve with the changes in the government rules, and we'll be sure to keep you apprised of what's happening in this arena. We definitely want to thank you for the time you spent with us today and for your participation in our webinar, and we wish you the very best in terms of compliance with your subcontracts with the federal government. So Tanya, I'll turn it over to you. Okay, well, I'm not sure where Tanya is, but we turned it over to her. So anyway, thanks for participating, and I think this will be the end of our webinar. Take care.